This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, November 6, 2017. Last week, commodity prices were mixed and economic reports were mostly positive. U.S. steel production rose slightly, remaining well ahead of last year due to good demand, yet a high level of imported finished steel. Oil rose about $1.50 a barrel to $62.07, an almost two-year high as OPEC continues to lower production and global demand stays solid. The U.S. oil rig count fell 8 to 729 despite these higher prices. Iron ore fell $2 a metric ton to $60 as prices remain somewhat stable on good demand. Prices have stabilized at the lower level they hit in the past couple of months. Scrap ferrous prices will be mostly flat for the month, with some downward pressure on prime grades. With scrap flows just fair, but demand slightly improving, there could be some upward pressure on prices in the months to come. Hot dip galvanized steel held at $9.80 a ton as upward pressure continues, and Nucor announced a $40 a ton increase on plate. Stainless steel 4 scrap prices remain steady yet again at 29.5 cents on the balance of supply and demand. Copper rose a penny to $3.11 and is showing signs of stabilization near a multi-year high. Copper's up 4 cents this morning to $3.15. The 5-year chart shows copper in a range near the 3-year high it hit 3 weeks ago. Copper inventories held steady while falling in recent weeks, which will keep upward pressure on those prices. Aluminum rose a penny, ending at 98.6 cents, staying near a 6+ year high. High prices have brought great flows into smelters, therefore true prices and deliveries into smelters are not as high as the index would lead one to believe. Aluminum inventories fell yet again to new 10-year lows, keeping upward pressure on prices. October's Caxton manufacturing PMI stood at 51, with output and new orders growing as confidence softened a bit and exports increased while employment fell. Government directives to reduce pollution have slowed industrial growth. U.S. personal spending rose a huge 1.0% month over month, the largest monthly gain in about 18 years as households recover from the hurricanes, led by automotive sales and utilities output. U.S. vehicle sales fell a bit to an annualized rate of 1809 million, with sales remaining near 10-year highs. A great number. The U.S. unemployment rate fell to a new 17-year low of 4.1% as the number of unemployed has actually dropped by 1.1 million since January. October U.S. non-farm payrolls increased by a strong 261,000 after a poor 18,000 in September due to the hurricanes. Job creation remains strong, especially in manufacturing. Great numbers, but actually they're not as high as the levels we saw in 2014 and 2015 when we had multiple months of over 300,000 new jobs created. 4.1% is a very low number, but when we look at what is called the labor participation rate, which is people over 16 years old that could work, it shows that only about 63% of the people that could work are working. So 37% of the people are not working, meaning there is great upside to getting people to work. The U6 measures unemployment U.S. workers that want a full-time job combined with part-time workers that want a full-time job. That is 7.9%, down from 17% in 2009, a great number. U.S. Wall Street indexes all hit new records, with the Dow up 105 points to 23,539 as the global economy remains steady and it remains in a slow growth mode. At BENLEE, safety remains number one in all we do. For those that have not retrofitted your older trailers with our safety look-up warning sign that warns drivers about electrocution, which is a real hazard, call us now to buy them for your fleet. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.